May 22nd, 2023. This is the S&P 500 E-Futures Mini on the NinjaTrader 8 platform on the 2000 tick chart. Go down to the descriptions below. You can see where I took my trades as well as where I thought I saw some setups. So today was actually, it's hard to say that it was in a trading range because I couldn't really find a good clean trading range. This is the pre-market low and this is the pre-market high. It's contained in this big yellow trading range, and actually the pre-market low, actually the pre-market high was actually closer down here, but then I raised it up later to be about right here. So kind of marked by this blue line here, the pre-market high. Now I didn't find too many trade setups, even though the volume volatility were so-so. I only got in I only got in two trades, both were green, and I think probably both were a little bit higher risk. And I'll go, when I get to them, I'll explain why. So these blue lines are kind of just resistance. They weren't full-on channels yet because I couldn't find a good place on the bottom to contain prices in a trading range. Excuse me. So these are the channels going up and down. These are the trading ranges. I kind of saw some resistance and some support lines, but nothing that clearly indicated a trading range. Potentially this might have been a trading range right here, but it didn't quite fit too clean, kind of where these two blue lines were. But I'm just going to go through the trades. It shouldn't take too long. Go down to the descriptions below. And as I said, it's just faster that way. So this is what happened in the pre-market. Pre-market prices weren't moving very quickly. It did make one leg up. This is actually way, way low. Let's see. It should be actually, yeah, it's actually at the bottom here. It looked like it made a measured move up. But anyways, prices were kind of chopping up and then moved sideways, moved up. Sideways again, and then moved up. So let's just see what happens here. On the open, I don't really see a setup. I mean, you could claim this is a new high here. Technically, your first entry long, but if you group this together, you could say there's a first entry long on this leg, and a second entry long, and it'd be a third confirmation of this potential ascending trend channel. But it's in the pre-market, and I don't. It's in the pre-market, and I don't trade the pre-market. These other candles kind of print and confirm this bottom line of support of this trend channel. Prices move up. Remember, this blue line is the pre-market high. I don't see a good clean setup. Got a new high here, potentially a first entry long there. Goes up. You technically have a second entry long here because you have a new high, first entry long, second entry long. Now, if you wanted to take this trade, believing prices will continue to move up in this bullish trend, you put your entry one tick above here, which is pretty much the highest point of this one. So right here, you would have gotten filled. Depending, I don't quite remember how this candle closed because you could have potentially gotten filled up here and then immediately stopped out if you kept your stop very tight down here. If you kept your stop down here, you'd still survive. Then for sure, it would have moved up again. So if you waited for this one to close, you would have gotten an entry here thinking that EMA is supporting, but you have a potential resistance here now. Although there's only two touches here, you can't really trust that this is going to be some kind of resistance compared to the very bullish uptrend contained in this orangey looking channel up. Then here, it would have moved down. Then you also have a first entry short right here and a second entry short. So potentially, you could have taken a short right here if you thought you saw a second entry short setting up. However, context-wise, it's a very bullish move up, so it'd be kind of risky to assume that you should take a short and continue downwards. So it'd be kind of a gamble trade. But here, let's say you took a second entry short, and let's say you took a second entry long here. In both instances, you're still in the trade. So here, depending on where you put your stop, your exit for your second entry short probably made the scalp now, because you would have taken it with a close below the EMA. And for sure here, you're probably about to get stopped out on your long position. So this candle most likely would have stopped you out on your long position, because if you took your second entry long right here, if you didn't have your stop down here, gotten stopped out, then most logical place to put it would have been one tick below here. Also right at this high of the pre-market, which would have been kind of a logical place to take it. But this is kind of a tricky setup. I don't know if I didn't. If it would have been safe to either take a long or a short. The better option, I think, would have been a short here, but that's still a crappy option because overall price action is moving bullish, and you have no reason to believe right now that it would come back down, except maybe this is a failed breakout. But this failed breakout dwelled out here for a while. To think that it's going to come back down in this trading range. So in both instances, I'm pretty sure it would have been kind of a little bit of an unclear crapshoot. So I'm glad I didn't take any trades there. Prices continue moving down. Draw this descending trend channel. It breaks out. I'm seeing a overshoot here, so I'm expecting when it makes a bottom, it'll fly back up. Right here, it makes one attempt up. Now it hasn't breached. Now it continues back down. Now you make a new low here, moves up, and I'm thinking it's going to break out to the other side. It does, and seeing how this is in this trading range right now, that I don't know if it's valid. It also made this move up. It came down, so I'm thinking this trading range could actually be maybe closer to right here, where my crosshairs are, except it didn't go all the way down to the bottom. So that's kind of makes it not as a strong, firm trading range. Prices continue moving up. You don't really see any good setups. You do have a new low here, first entry short, second entry short, failure, but it didn't quite touch the EMA, so I can't really trust it. Prices continue chopping left and right. You only got a first entry here, potentially a second entry. I mean, you have a first entry here, not a potential. You do have a second entry, but this is a terrible signal bar. Comes up, it touches the top of this pre-market trading range, this blue line. It breaches, comes back. So far, the EMA looks like it's holding. Comes down. I draw this smaller trading range because I see this consolidation up here, and I'm thinking maybe down here there might be some kind of reaction. So this could be potentially a failed breakout. It isn't. It just breaks out and continues down. So I draw this smaller descending channel. Contains prices so far. Looks pretty good. Makes a new low. It's kind of at the midline of, well, it's the midline of this trading range when I originally had it down here. But I don't see a good setup. So new low here, potentially a new low here, second entry short, first entry short, potentially second entry short. It hasn't made a second entry short. It has made a second entry short here. So to decide that it's going to either move up or down is a little unclear because you think it might want to either come back up to the touch here or at least come back down to test the midline and maybe break through because this could be one leg down, pull back, and the second leg down. So it's too early to try to take a trade here. Comes up. Okay, so now it touches the top of this pre-market trading range, breaks over, consolidates, and this is actually where I take my first trade. I saw a new high here, first entry long, comes back. I see this potential second entry long. Now, I took this trade because I like this signal bar. I'll admit it is an aggressive entry because I'm already near the tops right here, but I figured there was enough room to scalp out, and I saw it as a potential bunch of short people who went short. There's probably a bunch of stop orders right here to protect their accounts. Right, one tick above this quadruple or this three touches, because right here is these three points are all the same height. So I'm thinking if it hits there, it could break out and continue moving forward. So I took my entry one tick above, flashes up, and makes another touch right up here. So the reason I'm saying this is risky is because I am buying at the top, and even though the EMA is holding, there's not enough price history to make me believe it'll continue to hold. So this is a little bit aggressive. And so I thought, well, if it breaks up through here, it should be enough to flash for at least 1 point. This comes down, doesn't stop me out because my stop's actually down here. It flashes up, gets me my scalp, then it comes back down. So it looks like this pre-market high is holding. It's at least trying to attract prices back down. And this big candle flashes down. So if I was going for any more than just a point, I would have gotten stopped out on this big red candle. On price action like this lately, it's hard to try to shoot for more than just a point or two, just because things are just so congested and prices just haven't been very clean, haven't offered many setups. So I just dragged this yellow trading range to the top here, but I left this blue line as a pre-market high. Prices continue moving down, breaks out. That's how come when I saw, a touch here, that's why I was more officially believing that this might be the top of the trading range. And I do see a potential second entry short here, but I don't take this trade. I saw a new low here, first entry short, second entry short. Now, the second entry short is a pretty decent signal bar. It is at the top of the range, so you'll be selling at the top of the range, which isn't bad. There's just enough room to get from here down to here to get the scalp out. But right now, even though the EMA is kind of flattening out, it is still coming into play. It's being respected somewhat. So to take this trade, you'd have to trust that it, the EMA would probably at least break through and not be respected. So I wasn't too sure about that because the EMA in this trading range has been hugging the top end of this trading range. It's kind of a bullish bias as opposed to being down here. So it's kind of, prices are staying kind of above it at this point. So I felt it was a little risky to try to take this trade. And prices continue moving up. So I think it might have been enough for a scalp. Let's see. So it's like 42.1075 is probably where you would have entered, and you need to get out at 42.9, about 50 to make sure you get exit. So you wouldn't have gotten out yet. And then this candle would have gotten you out, or this one. The price is shot down. I don't see a good setup. It's getting very congested. Look at the side of these candles. Even though it's like just zoomed in, it is like side by side. Prices continue moving up. It tries to test the top of the range again. I see another second entry short. If you count this as one big grouping, because technically there's a new low here, first entry short, second entry short, you can restart the count, a new low here, double bottom, so you just restart the count here. So this is new low, first entry short, second entry short, but this is a terrible signal bar. This green candle is terrible signal bar. This doji hammer or at the top is very bad. And so what happened is prices pushed up really hard. Then on the life of this candle here, it pushed down. It was a big struggle, but then it closed right where it opened. Then on this red candle, it just flashed down and closed at the bottom. So who's to say this next candle that we haven't seen yet might flash right back up? It's a little risky, so I left it alone. Turns out it flashes down, but you don't know that it would have happened. So you just kind of left it alone because it's just really whipsaw. Prices continue moving down. I draw this support right now because it looks like there might be some kind of support at right around this region. And I did see a second entry long here because this is a new high. Technically, if you group these together and just say this is one new high, discount the one tick, on a bigger visual, it's one leg down. First entry long comes up, then a second entry long. But here, this is kind of in the middle of no man's land, except for this support that I drew. But this support is not really backed up by too much. If it had touched the midline, I'd trust it more. But it's kind of like just barely made it. So when you see this, you don't necessarily know it's going to flash back up or continue to back down on the next candle. Turns out this one flashed up, but it felt like it's too late. The trade has already been made if you want to take a trade, because to take one here it feels like you're going to run to the EMA. And it's nothing to say that one leg down pulls back, second leg down pulls back. It can make another leg down to try to test this midline. Excuse me, this midline down here, but I don't know that, so I just left it alone. And prices continue moving up. It kind of goes inside the shortened trend channel, makes a break, comes back up, touches the top. I saw a second entry short here. So new low here. You don't get a second entry short till about right here. Second entry short. I mean, you don't get a first entry short till about right here. Breaks one tick below. Then technically here's a second entry short. But the way I saw it was, even though it ticked one tick below, I counted this as one big move. First entry short right here. Then it pulls back, makes a second leg. This is second entry short. Now this I thought was a possible trade. It's a good signal bar. It's the top of this trading range or resistance or whatever you want to call it, because it has been respected in the past, so that you believe it's kind of valid at this point. Not necessarily a trading range because the bottom has been inconsistent, but at least you know this resistance at the top has been holding. And there's enough room to the EMA. So, it's been proven to hold. This rejection might continue back down. So you would have put your entry one tick below, would have gotten filled right here. And then most likely on one of these candles, you would have gotten your scalp. Then prices continue chopping left and right. If you're trying to go for more than 1 to 2 points, probably just 1.5 points, you would have gotten stopped out by this big candle here or this one right here. Then prices continue moving up. It breaks out of this trading range now. I draw this shortened trend channel going up. And I notice this overshoot, so I'm expecting prices to at least maybe break out to the other side. It does. There's three very strong candles down. Makes a first entry long here. Comes back. I'm wondering if it's going to make a second entry long. Right here, I'm thinking it might have a second entry long. but there's also potential second entry short because the second entry long hasn't been confirmed yet. It's only first entry long. You're still waiting on the second entry long, but you have a new low here. You have a first entry short. You have a second entry short that's been confirmed now on this candle. Now this candle, excuse me, this candle might be a possible trade because if you're looking at the bigger context, it broke out of this semi-ugly trading range. It could be trying to push back down, so it could be a failed breakout. It also looks like it made 1-2 pushes up, now came back down. This could be considered a lower high right here because it made 2 pushes up and then try to go back up again, but it made a lower high because it tried to break. When it broke out of this trend, shortened trend channel, it might be trying to move back in, but it failed. So since it failed, there's a potential trade here. Although this candle closed right at the EMA, I preferred that closed more bearish, and I thought it might have been a stronger trade, but nevertheless, it is kind of a trade here. Price is coming in, moving down. So what I see here, I'm thinking bearish now because there's a new high here, first entry long, second entry long. Now I'm thinking it potentially be a second entry long failure. Now, yes, this could have a bounce right off of this outside part and go up, and it kind of almost did right here, and it kind of almost did right here. But the overall sentiment, it is kind of just sideways, right? It made higher lows. So this is the second trade I'm about to take, and I admit it is a little risky because I entered the trade after I saw this candle because I needed to make sure the failed second entry long confirms, and it confirms when this ticked lower, but it could be a trap. So this one opened, it flashed around, I entered right here thinking it's going to continue down, and it closes a doji. That made me kind of nervous and potentially regret that I actually entered this trade because I'm thinking, well, I also have the top of this descending channel and it's been rejecting prices, so it could come back down. And I was questioning the strength of the top of this trading range, but I didn't think it was that strong. That's why I took the trade, thinking it's going to continue being bearish, but I should have waited for a confirmation lower high. So my stop is actually 1 tick above here, and I survived the trade, and then I see this lower high form, and I thought the next candle would take me out. Next candle moved down. That's when I realized this lower high was probably a safer entry to have taken on this particular setup, because now it's also confirming a rejection of the EMA. It broke down below, and if I wanted to take a trade right here, might have been a safer entry than to take it right on this one. Plus, I would have gotten a little bit less risk. Then prices continue down. So my entry here, I finally get my scalp here, then prices continue moving down. And actually I can extend this out a little bit. And then it kind of breaks out. I don't see another setup here. You can say there's a new high. There's kind of first entry, second entry, but it looks kind of congested and ugly. Not very clean and clear, so I left it alone. It's also getting toward the end of the day. So then it just kind of chops to the end of the day and it closes. So that's how I saw the charts today. I would admit the 2 trades that I took, admittedly, I just barely got out, which one right here and one right there. Well, this one I barely got out. And the second trade, I almost got stopped out, but they ended up working. And overall, there weren't too many setups today. It was kind of, although there was volume, the setups just weren't clean, which I guess is kind of what's been going on for the last couple of months. Prices, most of the time, were just kind of choppy and hard to read, at least for my experience level. And every so often, the market will throw you a bone, and then there's like pretty decent trading, pretty good price action. So I just know that on days like this, and it's hard to know at the beginning of the day, the rest of the day is going to turn out to be that way. But I do have to keep in mind when I do see things slow or I'm just finding it hard to read, especially at the beginning of the day, I might have to just be more cautious and potentially just take no trades as opposed to walking away with red trades. So that's how I saw it. Hopefully this is helpful.